as the stock of the day, well, actually, I thought we'd focus on two briefly: Syrah Resources and Talga Group. On Friday, China surprised the market by saying it would restrict graphite export permits for some products to protect national security. It is the world's top graphite producer. Ministry in charge saying the move was to promote security and stability of the global supply chain and industrial chain in China. So we're seeing a couple of names move in reaction today. That's Syrah Resources and Talga. Also, Chris has already written in to ask us about these companies. So there is Syrah Resources. We've got Talga Group as well, today up by a solid 12%. Daniel, I'll start with you today, and welcome again. I know you and Gaurav have been keen to get on the program together to talk everything mining and mining stocks. So this move in terms of graphite, obviously it's a key commodity in terms of the EV revolution. So is this a big opportunity for a couple of these Australian miners?
Yeah, look, I haven't looked too deeply into the news, Nadine, about the exports kind of license restrictions in China, but it's not something that's new coming out of China. I mean, they've kind of played this hand before with different commodities and different times, specifically about the requirement for a new export license. When it comes to graphite as a commodity as a whole, I think we're probably not very positive on the market at all, to be quite frank. Especially a company like SYR probably has one of the world's best natural graphite deposits, but it's actually really never been able to make any money at all. And the graphite market is just so opaque, so dominated by China, not only the processing, but the production as well. And it also comes back to, I think, in the EV material, so the anode material, it does seem to be from kind of the industry experts who I've listened to, that the synthetic graphite is a more dominant use of choice, because I think it's a less volatile matter and has higher purity. So look, I'm a little bit concerned about the natural graphite market, and obviously a lot of these stocks on the ASX. We'd probably be avoiding all of them. Going back a quarter, Syrah actually announced that they actually didn't even sell any product at all last quarter, so not the most recent one, because there was no demand within the market. So it's just so opaque, not making money, cash flow negative. I think they've burnt US 130 million this year as well, which is a lot of money relative to the size of the company and projections of future cash flow. So I think we'd be happy to avoid these companies.
Avoiding both Syrah and Talga Resources, Daniel Ortisi. So Gaurav, what about you? He's not really that excited about graphite as a theme either.
Yeah, that'd be my take as well. A lot of people look at the demand side of a commodity and expect the prices just to follow. But of course, supply plays a big part in discovery of price. It's not just a demand story. And graphite in particular, there's a natural source of graphite, and Syrah, the deposit that they have, I think it's in Mozambique, is a fantastic piece of geology. It's the world's largest hard rock deposit. It is huge. The flake size is just perfect. It happens to be in a difficult jurisdiction, but if that was the only problem, I still think you could make an economic success out of it. The problem really is with the larger graphite industry, and it's one where you can artificially create graphite, and they've done that very successfully in China for many years. And so you don't really see, there's no reason why this particular mine in this particular jurisdiction should be any more valuable at this time than any other time. I think graphite is a very difficult problem. It's not like lithium, where you have to dramatically grow the discovery, the processing, and the supply of the good. You've already got a artificial way of producing graphite, and that just has to scale a little bit more every year, and it's pretty simple to do that. That's not an intractable problem. The China news is bad. I mean, it's not good when supply is withheld, but it can be switched back on tomorrow. And I don't think that's any reason to re-rate a stock. I wouldn't pay any more for the business just because of that, because the reasons it's been switched off, it can be switched right back on again. Talga I know nothing about, so I'll just leave those comments with Daniel. But this is an excellent mine in a difficult jurisdiction, in an area I'm not particularly interested in, and that's probably too hot in any case. With mining, it's whenever I hear non-mining people start giving me mining tips, you just know. I mean, this happened with copper earlier in the year. I don't know if you've noticed.
Oh God, everybody was all over copper.
Classic sign to get out of copper, because when the when the non-mining person starts recommending your mining stocks, you know you got to get out. It's the equivalent of seeing stock prices splashed on the 6 o'clock news. You know it's something big is going to happen. So you don't want to go there. And I would say graphite's in the same place. It's an avoid for me. I don't see the investment case for it.
Thanks. Okay, now Daniel, just a follow-up question to you, because there is talk that China could, extend some of these export restrictions around other critical minerals. And the first one that's come to many people's lips is potentially rare earths. Now, we're not talking about any rare earths later in the program. So just a quick thought on strategy. Gaurav just said when everybody's talking mining stocks, probably time to get out. When it comes to strategy, would you ever sort of base your investment decisions on the fact that there could be potentially more export restrictions coming from a country like China, which Gaurav has pointed out could flip the switch on and off as it so desires?
Look, Nadine, not really, because there might be, like I've mentioned, it might result in a short-term blip or a short-term re-ratement, but a lot of these things don't have longevity to them. And if you think about even Lynas, it's the largest producer of rare earths outside of China. But at the end of the day, the majority of its product does go to China for the use in creating those rare earth alloys. So, it's going to be a factor where in the near future, you're never going to be able to avoid the impact of China in any commodity market. I mean, if you're talking about rare earths specifically, it can be a bit unique because, the majority of the value is created through the separation of rare earths, which is pretty unique method of processing, which, Lynas is basically the main infrastructure holder there out of any company outside of China. So, arguably, I think there's always a case for Lynas over other rare earth plays because they have the infrastructure and the expertise, but specifically on that reason, potentially, to do with changing dynamics out of China, probably not so much.
Got it. All right. Look, I do want to just leave that for now because you're not ringing the bells for any of that. Let's get